We're going to go into a recession here pretty quick. You think about how much people are paying for fuel. When they're paying more money for food and they're paying more money for gas, it is more expensive to do things. People stop doing things. People stop spending money. If it gets really bad, they stop paying their bills.
Russia overnight launched its long-anticipated attack on Ukraine.
Now, this ban is expected to increase gas prices in the United States, which you already know has hit an all-time high.
Big story, though, as the war in Ukraine rages on.
Why are interest rates going up? It's inflation. The Fed had lost control of inflation before Russia went into Ukraine. They were talking about a 50 basis point hike on the Fed funds rate at the March 16th meeting. And then Russia went into Ukraine. And now the Fed chair is saying, you know what, we might do a 25 basis point hike on the Fed funds rate. And remember, the Fed funds rate is the Fed's tool to help bring inflation down. We were at 7% inflation. When there's a war, you look at Vietnam, you look at 9/11, you look at really any other time in history when we've gone to war, interest rates go down. As the war is prolonged, what goes up? Inflation goes up, and interest rates follow. That's happening right now. Interest rates initially, they went down. They were at 2-year high, and then Russia went into Ukraine. Interest rates came down. And there's nothing refreshing about it. They came down despite inflation. Increase in fuel prices. $130 a barrel for oil. The increase in all sorts of commodities, whether it's nickel, which is at 63% increase, or copper, which is at an all-time high on its price. Let's talk about wheat. All right, let's talk about all these other things that we use across the world, all right, that are causing the prices to skyrocket. All right, and that is immediate inflation. What the Fed does, it impacts 2 to 3 months down the line. All right, we don't see that, but we're seeing the effects of the war, Russia and Ukraine. We're seeing those effects right now. We're going to go into a recession here pretty quick. All right, you think about how much people are paying for fuel. All right, how much they are now paying for food. Okay, when they're paying more money for food and they're paying more money for gas and they're paying more money for whatever it is they're buying, because everything's cost. Look at vehicles, man. I can't even buy a new Ford Maverick or Lightning because they've stopped production because they cannot produce because of supply chain issues. These are all inflationary issues. All right, when it is more expensive to do things, people stop doing things. People stop spending money. All right, they can't spend money. And then if it gets really bad, they stop paying their bills. All right, and we are heading into a recession. Here's one indicator. All right, I'm going to kind of diverge here. One indicator that we are close to seeing right now, it's called an inverted yield curve. All right, and that is basically a comparison of the 10-year Treasury, the rate of return, versus the 2-year Treasury. Typically, 2-year Treasury returns are lower. More risk, less return. 10 years, typically a higher rate of return, all right, because you're putting your money away for a longer period of time, you expect a better rate. But when that 10-year rate of return is less than the 2-year, that's called an inverted yield curve. Every time that has happened, we've had an inverted yield curve, and you can look on this chart here, all right, and the areas where we went into recession are red. That's when we've had the inverted yield curve, where the 2-year return is better than a 10-year. And we are 24 basis points away from that right now. And if the Fed raises the short-term Fed funds rate, all right, by 25 basis points, guess what? That inverted yield curve is going to happen a lot quicker. Really good chance that we're going into a recession, all right? We just had a great jobs report. It was an amazing jobs report at the end of last week. All right, 3.8% unemployment, man. Economy's humming. This war and the rise in all the prices across the board is going to really put a halt to the economy. What does that mean for the housing market? Do the housing prices drop? Actually, only one time, of the last 7 times that we've had recessions have price of homes gone down, and that was in 2009. And that recession was actually caused by the housing market. That was when you could fog a mirror and buy a home. Just a lot. There's a lot more supply than demand. We just got way out of control, and that's really the only time we've had a recession and housing prices have gone down. So typically, housing market is stable. Prices actually go up during a recession. And why is that? Well, that's because interest rates typically decline. If you look historically, all right, and you look at this graph, historically, as you go into a recession, interest rates are going up, all right? But then, as inflation gets under control, all right, interest rates will go down. They go down leaving the recession and immediately upon the end of the recession. If you look at the gray areas on the graph, all right, you will see interest rates came down. Look at that 1980s, all right? That's when interest rates were at 18%, all right, at the beginning of the 80s. We got out of that recession, all right? We got into the recession, and the interest rates continued to go up, all right? As inflation started to go down, it took a while, but then interest rates dropped, all right? And they dropped out of the recession, okay? So we can expect that to happen, but before interest rates go down, all right, we've got to get a handle on inflation, and inflation has to go down.
Increased 11% in 2022. That's down from the real estate marketplace.
Prices are going up. Interest rates are going up. Inventory's going up. We're going into that spring season guns a-blazing, all right? There's more inventory coming on the market. So many people that I know are going to sell their home, especially because they're going to PCS and they know they're not going to come back. And they're taking $200,000, $300,000, $400,000, $500,000 that they've made in owning their home over the last 2 to 3 or 4 years. All right, so inventory is going to go up. So what does this mean for you if you're a buyer? Don't give up. All right, don't say, I'm going to wait 6 months. Hey, brother, if you wait 6 months, you're going to miss the boat. You're going to miss the home, all right, because home prices are going up. I just told you interest rates are going to go up, and they're going to probably go up for the next 6 or 7 months. All right, your prices are going to go up, interest rates are going to go up, it's going to become more expensive, and then you're going to miss out, all right, when you had a chance. So do not give up, all right? Do not give up on buying a home, all right, just because the inventory is low. The inventory is going to improve, and with more inventory, all right, is more selection, all right, less competitive. I think it's still going to be competitive. It's still going to be ultra competitive, but there's more options for people to look at, all right, and you typically see that during the PCS season anyway. So really a great report. You know, our housing market is strong. I've seen some posts on my YouTube page that, the bubble's going to burst. No, dude, the bubble ain't bursting, all right? We're going to go in a recession. Housing prices are going to stay stable, all right? Homes are going to continue to appreciate. I hate to break that news to you, but it's going to continue to go, all right? At what point will it stop? I don't know that, but I will tell you this. The rate of appreciation may slow down, but the appreciation will not. All right. If interest rates get into the 5s, I can see housing prices really start to slow down, stagnate, but I don't see that happening over the next couple months. Maybe at the end of the summer, we'll see. So anyway, still a great time to buy. Remember, all right, if and when we go into recession, all right, at some point those interest rates are going to come back down. All right, and then if you've taken that interest rate a little higher at the beginning, you'll be able to refinance later. All right, again, I've done that every time I bought a home. All right, that's about all I have for you today. A lot of stuff. Man, there's a lot going on. I tell you what, it would be awesome if you would like, subscribe, or comment on my YouTube page. I have a lot of stuff going out, and I love doing it because I love understanding the why. Why is the market this way? Why are housing prices going up? I comment. Love to have you come and join my family. Be part of my ohana. All right, aloha.